Thank you for the introduction, and good morning, buenos dias. We will be having this debate in English, so if you want to put on headsets for those of you who need translation. We're going to be on time, that's for sure. We're going to be quite active. We know that we've had 2 late nights, so we want to create some energy on stage, hopefully positive energy, and at the end we need some involvement from you guys, so we'd like some questions. London market is waking up to probably a Conservative majority this morning, and we'll maybe have a look at that and see what impact that has on in our world. My name is Chris Smith. I'm responsible for the international part of Mapfre Global Risks. At the moment, it's the small part, and we want it to become bigger. And the great part of the story is that we've already got a very, very solid base in Spain and Latin America, from which we can learn many lessons and learn from experiences. But at the same time, we're all very conscious that to operate in a global arena, we have to change, or we have to adapt to these very different marketplaces. And to be fair, London is only one of a number of markets that we will be operating in. Why are we here this morning talking about London market? Well, first of all, I'm very honoured to be on stage, I think for the first time, having an international topic to discuss. But London market, we've all worked in the same London market for many, many years, and I hate to think what the total years of experience that we've got around the table here. But we want to try and dispel a few myths. We want to talk about some challenges that London market has got. It's not perfect. We know that. Is it changing? Is it needed for Spain and LATAM clients? Is it needed for international clients? And more than anything, where is it going? What's the next stage? And how should Mapfre Global Risks and its existing clients look at London? I'm sure that the risk managers in the audience touch London market in some ways, sometimes directly, sometimes through a reinsurance route, but it will probably have an impact on most global programs around the world. So we've managed to fly over a very experienced and a very charming group of London market professionals at no cost. They're giving up their own time to do this, so we should be nice to them. But I'm going to be a little bit Jeremy Paxman-like. I don't know whether that translates very well into Spanish, but I'm not going to accept bland responses, and I'm not going to let people talk for too long, especially about their own organizations. So be warned, guys. So we have Jason Howard on the far side. Jason has spent 25 years being a reinsurance broker, and he has seen the light. He's moved over to the underwriting side. And, large intakes of breath from those in the audience who are involved in the underwriting side. But yes, Jason is running an underwriting business called Acapella. One of the major shareholders being Willis, where indeed Jason spent most of his career. And in fact, Jason was the Mapfre client advocate within Willis, so he knows our business very, very well. Next to Jason, we have Paul Knowles. And Paul Knowles is a member of the JLT Specialty Executive with London responsibility for major corporates, construction and real estate, but with a global responsibility for construction. And we felt that, the specialty part of London is important, and certainly that's what Paul brings. Again, 20 plus years in the London market, worked in Central Europe for part of that time, but very heavily involved in major infrastructure projects around the world. Next to him is Alan Reed. Alan is an MD in Aon's global client business. He's based in the UK, currently has responsibility for a number of Aon's global client relationships across Europe. Again, 25 years of experience. It seems a very common theme here, working with or within the London market. And quite unusually, Alan's had experience working for brokers in the London market, for 2 global insurers in the London market, and he himself was a risk manager for a FTSE 100 company. So there can't be any question that Alan can't answer about this industry. He's seen it from every different angle. And finally, James Nicholson, who is an MD at Marsh now, responsible for some of Marsh's largest European and Middle East and African-based global clients. It says here 30 years. So actually, James, you're a little bit different to the rest. You've had 5 years more experience. And in that time, James has worked, it says here, for a small number of large global brokers. You can probably work those out, but all in this segment. So guys, if you need any questions answered about the London market, then these guys should have the answers. And if you don't get that out in the session, then grab them at coffee as well. So the process is going to be, I'm allowing the guys a few minutes to introduce themselves and to talk a little bit about their experience and a little bit of a theme of their experiences of London market. I won't allow them to go on for too long because the most important part will be the debate that we have. And I have some questions ready. We don't know how it's going to go. I may not use the questions depending on how the debate goes. But I'll try and keep it relevant. I'll try and keep it sharp. And I'll try and keep it to the point. So I'll come and sit down. And maybe, Jason, you can kick off by just giving a little bit of background about yourself.
Because I thought I was going to get at least half an hour to talk about myself, so I'll have to keep it to 2 minutes. But I'll try and do that. So, yeah, as Chris said, I've spent all my career in the London market. Started off with a little broker called Johnson Higgins, which no longer exists, and then moved to Willis in 1997 as a reinsurance broker. And ran the Latin American business there till about 2007, and then took over running all the international business for Willis Re till 2011, at which time I was asked to go and run all the facultative business that Willis has worldwide, which I did for 3 years, and changed to a cappella last year, which I'll come and talk on a little bit in a minute. Chris asked me to give an overview of what is the London market, and I thought I'd take some statistics which have been recently prepared by the London Market Group, because it shows you the size and the breadth of the market. So London last year, or 2013, wrote £60 billion of premium. There are 65 company markets in London. There are 91 Lloyd's syndicates. There are 8 P&I clubs, which is the marine liability clubs, and more than 200 brokers in the market, employing about 48,000 people both in London and in the regions. It represents about 10% of UK financial services and about 33% of the insurance sector. So it's a very significant part of the overall UK economy. And where that fits in the context of the world, I think it was mentioned in the introduction, London is the largest writer of commercial insurance, writes about £30 billion a year. To put that in context, that's 4 times more than Bermuda, 11 times more than Zurich, and 15 times more than Singapore. It's a very significant concentration of commercial insurance. It's also the 4th largest reinsurance hub after Germany, Switzerland, and Bermuda. So a very significant marketplace. The split of the premiums, about 33% comes from UK and Ireland, 31% from North America, and 16% from Europe. So a reasonable spread, but it is undeniably weak in the emerging markets, which is something I think we'll probably want to come on and talk about. So just finishing off, why did, I started a new business called Acapella, and why did we choose to put it in the London market? We could have put it in New York, we could have put it in Bermuda, we could have put it in Madrid, frankly. But the reason we decided to put it there is it has access to things that running a large underwriting business you need. It has access to capital, it has access to staff, it's got access to expertise, but most importantly, it's got access to business flows, which still come through the London market in a significant amount. It doesn't mean it hasn't got challenges through stronger local markets and underwriting expertise in other areas, and it has to find solutions to its cost problems. But for us, there was no question that the London market was the right place to start a new underwriting venture. So.
Okay, thank you, Jason. Yes, I'm Paul Knowles. I've spent most of my career in the London market, and in particularly in the specialty areas. A lot of that time focused in the construction world, but more recently in the major corporate as well. And it was the specialty area that Chris asked me to sort of say a few words about. And I think from the London perspective, specialty is one of the areas that London has some unique opportunities and unique position in. There's a real recognition now that the level of capital available and the fluidity and speed of which that capital can be deployed, that London's historical gravitational pull for insurance is diminishing. And London needs to become more competitive, more responsive. And I think one of the areas that it can become and continue to be a market leader is in the specialty areas. When we look historically at some of the pioneering work that the London market's done and the role it has in areas like aviation, where it's got something like 58% of the aviation market, particularly for the major airlines, in the energy world, where it's nearly 50% of the major oil companies. Risks are placed into the London market. Marine, I think it's a third of the marine risks go into that market. London has a unique place, but again, it has to recognize that the world has moved on. It has to become very more customer focused. It has to be responsive to the needs of its customers. It can no longer rely upon the fact that people are going to come to it. It has to draw and attract people into it. And I think that's one of the key challenges that London needs to sort of face now in terms of how it responds to its customers, because it has to be more and more customer orientated.
Okay, Alan.
Good morning, ladies and gentlemen. It's a pleasure to be with you today. I'm actually already feeling incredibly favourable towards the Mapfre organisation. The last insurer that asked me to sit on a panel was in a windy, disused aircraft hangar on the outskirts of London. So you can imagine the surroundings here already made a big mark on the London market for Mapfre. So, but thank you very much, Chris, for the invitation. As Chris mentioned, I've seen the market from a number of different perspectives, and Chris really asked me to say a few words today and focus my thinking around the London market and customer engagement, and particularly the engagement of the major carriers with the global risk type of customer. And thinking about that, I guess for me there were two initial questions that I would ask. Is firstly, do those London insurers actually want to invest time and develop strong relationships with the major clients? And frankly, as major international clients, why would you want to develop relationships? Are there value to either party to be gained out of that? And hopefully that's something that we can talk about. I think the second topic, which is very relevant, is around service. And is the London market and the insurers in the London market investing sufficiently in delivering service to their major clients? Or, as many, I think, would have us believe, is service just a necessary evil that follows the excitement of concluding the deal? So again, as we go through the questions, maybe touch a little bit on service. And just a sort of concluding thought, for me, I think I hear sort of conflicting views on London market. One is that it is the least customer-centric market that you could have. It's focused purely on price and product. The other, of course, is that it is the most customer-centric market that you can find, the only place in the world where all of a client's needs can be met in one place. So the reality, of course, is it's somewhere in between. But perhaps as a finishing thought, the market was built around relationships. Yes, traditionally between underwriter and broker, but more latterly, I think, involving the customer. albeit I think the corporate insurers are very late to the customer focus. I think they've entered into the field with gusto. I think as you wander around London, you may well meet many, many people who now have relationship in their title. It seems to me for every underwriter I meet, he's accompanied by somebody who's called a relationship leader who actually may have a very different story to the underwriter. And I think that's something that we need to be very mindful of. But at the end of the day, I think it is a market that values relationships. My own experience, the relationship between the major insurers and the major corporates in London is not yet the depth that I see in countries like Germany, in Switzerland, and certainly here in Spain, where my experience is the relationship between the carrier and the customer is much broader and much deeper. So if you feel that the London market is a place to transact, I think you'll find a market that welcomes relationships. I think you won't find it a market perhaps initially that has those relationships as deep with the major corporates, but I think it's also a market that now recognizes that service is a priority and no longer an afterthought. So hopefully we can develop some of those things.
Okay. Thank you, Alan. James.
Well, my background has always been a broker. I've never had the opportunity, like Alan, of being a client, but I like to think that I spent my entire career looking at our world through the eyes of a client, and I've been incredibly privileged in my career to have a number of Spanish clients over the years. I've had the opportunity in various stages to place business on behalf of Telefónica, of El Corte Inglés, of Cepsa. I've done a lot of business also in Latin America with clients like Telmex, PDVSA, and numerous others. And so the perspective that I've always had is how do I, how does the London market look to the customer who sometimes does or sometimes doesn't need it? And over those years, those clients have had sometimes very heavy placements in the London market and sometimes have been able to place 100% without the London market. The topic Chris asked me to cover today is innovation. Because the London market is quite well known for insuring actresses' legs, and I noticed last night when we were watching the game of Pelota that at the end somebody said, well, some of these players insure their hands. So I thought there's a new sales target for the Marsh Spain guys there. But the problem with innovation is it's often frustrating, and if you look at the world now, you look at the risk registers of most of the corporate companies, and you will see that approximately 2/3 of the risks that are on the risk register have no insurance solution. One of the findings, and Jason mentioned the London Market Group, produced a report, and one of the issues that the London market has at the moment is how does it grow? And innovation is a huge topic in the London market at the moment. But innovation takes a long time. So if you take directors and officers insurance, for example, I looked it up before I came here because I thought, when did it start? And you know, it was invented in 1930, but it isn't until 1960 that it took off. It took 30 years to become successful. And I was thinking this morning, when we talk about innovation, we have an expectation that things will happen immediately. So if somebody says you won't have to pick up a phone with a wire, you'll carry your phone on you, we were, wow, it's exciting. And when the first mobile phones came out, they weighed a kilo, they were about that size, and all they could do was phone calls. And now, of course, we all have smartphones. So it took a lot of courage, I think, for the early adopters of technology and innovation to buy those very expensive mobile phones that only did one thing. But I think innovation in the insurance area is the same. When, for example, we look at supply chain insurance, cyber insurance, there are solutions on the market at the moment, but they tend to be quite restrictive wordings and quite small capacities, which for a lot of corporates are kind of insignificant because corporates need 100 million of capacity, 200 million, and the market is only offering 10 or 20. So, I think the London market is capable of doing a lot, but it needs a lot of engagement. I mean, it needs customers to try and push the boundaries of innovation. And these products are evolving all the time. And cyber, for example, offers covers today that it didn't a year ago. So I think the main thing I'd like to leave with you is that if you don't engage with the London market will really struggle to innovate. I mean, it really requires the clients to try. And you might be surprised, agreeably, I think, by what the market will do for you if you engage with them.
Well, thank you, James. Now let's get to some debate, because straight away I hear a lot about the customer needing to engage with the London market. Now, just a question here for Paul. How easy is it for the customer to access London market? Do we overcomplicate it? I've worked in London for 30 years, nearly. and I still don't understand it. I mean, it's a difficult market. We have line slips, we have sidecars, we have MGAs, we have delegation of authority. You know, if I was a customer, I think I'd be scared off the London market. And I think, you know, do brokers actually protect their own position by making it more complicated?
I think one of the challenges we have is London isn't just one market. It's many markets, you know, in terms of different needs, you know, stacked horizontally, vertically. And therefore, you know, a lot of those markets have developed their own jargon, and without any question, it can be very confusing. And, you know, we come back to this central theme. It's got to be around the customer now. And, you know, we've got to get rid of that jargon. We've got to drive transparency and clarity. At its heart, insurance is the most simplest product in the world. You know, you're just transferring risk from one party to another. And I think that's the challenge that you know, the London market has in general, is to be able to give the customers a clear understanding of what they are going to deliver and what the customer wants and how it gets it. So, you know, I totally agree with you, Chris. I think, you know, it's become, because of its size, because you've got 48,000 people competing in different sectors, the jargon is just built and built and built. And, you know, the role now of insurers, brokers, is to drive much more clarity and much more openness for the customers to actually know where to engage and how to get the best out of the market.
Okay. Anybody else got a point?
I'd just say, you know, it's interesting that having been a broker in the London market for 25 years, I thought I knew how Lloyd's worked. But it wasn't until last year when I started to run a Lloyd's operation that I realized I had very little clue how Lloyd's actually worked internally. I understood there's a customer-facing bit, the underwriters at the box, but how the actual corporation works behind that. And I think Lloyd's needs to do a better job of explaining what it wants to be in the marketplace as well. And certainly, you know, that's why I'm very keen to come and talk in panels and explain how the market works as much as possible, because it's shrouded by arcane terminology and words that people don't understand. But actually the concept, as Paul says, is a fairly straightforward one. It's the acceptance of risk for a premium. It's just lots of different classes have grown up and complicated the language, but it's not a complex place ultimately.
So when we look at London markets from an expense point of view, you know, 9% higher expense ratios than its peers in 2013. You know, is this higher transactional cost? Do we pay ourselves too much? Are we too inefficient? You know, Jason, how can we compete with that disadvantage in London?
Well, I mean, obviously I've got a carrier hat on now, and I'm the one paying the extra 9% for, you know, is coming off my premiums. So, but I would, you know, clearly what we always do is we're trying to look for value. And if we, as a relatively modest-sized underwriting operation, tried to build a worldwide network to bring business into all different classes, there's no way we could do it for 9% additional cost. So I think you just got to look at the value that you get from the brokers that bring you the business. I think London's expensive because it handles complex risks. And complex risks require more analytics, they require more analysis, and therefore I think there's an add-on cost to that, particularly when you're classes like reinsurance. There's a huge amount of additional on cost. I think the brokers have lots of additional services they have to provide, which also cost money. But at the end of the day, you know, it comes down to whether the client feels they're getting value when they buy. I mean, I buy in the London market, I sell in the London market. The important thing is the client getting value? Because if they're not getting the right product at the right price, they'll go and buy it somewhere else. And I think that's the acid test of whether, now London needs to maintain its competitivity, and then if you look at a lot of the restructuring going on right now, the broking houses, some of the underwriting houses, they're trying to streamline their processes, they're trying to move more of their back office into low-cost environments, and trying to bring the cost of transacting down. Because I think we all accept that we're in a very soft market right now, but the likelihood is we'll stay in a soft market for a prolonged period. And we have to understand how to be competitive in that.
Chris, you probably wouldn't expect me not to pick up on your point about brokers using the market complexity to strengthen our own position, and perhaps challenge that with another view, which is over the years, you know, brokers have sought to perhaps take the burden away from the client in terms of the complexity. In fact, I think, you know, picking up on James' point around systems, I think over the years, brokers have wasted, frankly, millions of dollars on proprietary systems to try and lift the burden. And I think one of the things that we're all sort of talking about now is more a market-based technology, a sort of an exchange technology. And I think, we're recognizing that whilst I think the competition in the market is great, as a market we're also competing with others. So I think there is an element of that balance between competition in the market, but actually working together around some of the infrastructure issues. And I think that's going to be a major change going forward.
James, question for you. London doesn't have a very strong position in emerging markets. In fact, its share of business in those emerging markets declined in 2013 and 14. How can London change its profile to be, a market that's relevant for emerging markets? I mean, so for LATAM in particular, what is the relevance of London for our Spanish customers and LATAM customers in the audience?
I have a personal view on this, and I'd welcome Jason to challenge that. But if you think about the London market, really the core of it was really Lloyd's of London. And Lloyd's of London basically has two capital characteristics, which is when it started, its capital came from members. And they were relatively insensitive capital providers. In other words, they were prepared to assume large losses once in a while, providing they made profits over the year. So they weren't looking at quarterly results and quarterly performance. And in addition to that, the central fund in Lloyd's made that actually there is some pooling of the capital. Now this makes for an ideal underwriter for writing risks of high severity but low frequency. In other words, the London market doesn't really like, broadly speaking, motor insurance, which runs at a very high loss ratio. It much prefers to do treaty insurance, marine, satellites, things that when they go, but usually don't happen. So when you look at this customer base, there's a very different thing. If I take, for example, my own area of specialty, which is property insurance, in Spain you've got consorcio, so you don't effectively have natural catastrophe exposures for Spanish risks. Therefore, you don't really need the London market. There's plenty of capacity for property risks in the Spanish market. When you're in Latin America, though, if you're in Chile or in Peru or even in Mexico, you will quickly run out of earthquake sublimit for some of the larger risks. This is where the London market comes in. So I think one thing that in my opinion is the wrong way of looking at things is that somehow London is an alternative to the local market. I think most of the customers here who place business in the London market will find that actually it's a blend of local market and London market. So a typical example would be there are many, many global programs, property programs, that will have a Nat Cat sublimit with the likes of MAPFRE and the other big players, Allianz, AIG, Zurich. But there will be spikes of exposure where they will need to buy excess quake, excess flood, excess wind, and that's when the London market comes into it. So I think that the London market should be viewed as not a market that has all the solutions. It has solutions for some risks, particularly those of high severity and low frequency. And it's a market that really works best when you make it work with what you've got rather than instead of. But I would welcome some comments.
Yeah, I'm not sure, because I think effectively the capital base of Lloyd's has significantly changed now. And if you look, 90% of the capital at Lloyd's now has another platform to operate on. So, most of the big worldwide players have an operation at Lloyd's of some description. And why they have it there is because there is a marketplace where certain types of risk comes through. I agree absolutely. The high severity, low frequency risks, a lot of the distressed risks when they can't be placed in the local markets. London is the obvious place because London likes to write that kind of business when it's distressed. You mentioned niche before. I agree. I think that's an area where London is good because it pools expertise and it has a relatively long-term time frame. But, for me, the transfer of business from London back to local markets is just a natural part of the cycle. And I think as you get increased capital, you get increased expertise, you get increased underwriting capabilities in a local market, the business will naturally flow back there, because ultimately, if I'm a client and I can place it locally, my frictional costs come down and I'm likely to get a better price. And so I think in the London market, if they don't realize that, it's a bit like saying, well, if I go back to the nightclub I used to go to 25 years ago, I would still expect to see the same people dancing there. The game has changed, and London needs to adapt to that. So London needs to be offering products and things that their clients want at a competitive price. And I think they continue to do that. We wouldn't be the largest insurance market in the world if we didn't continue to do that. But it's a constant challenge, and as I say, I think the flexibility of the capital base is even more significant, because if you take a Catlin, or probably a bad example since they've just been bought, or you take an Amlin, if they have to write the business in London less 35 points of total commissions, then they can write it in Bermuda less 25, they write it in Bermuda. So, they've got options, and I think the London market needs to just to be aware of that.
If I would add to that, I think, particularly in sort of places like Latin America, you've got to see that the insurance market has grown. London's proportion of that may have declined, but the cake is bigger. And I think London's challenge is understanding the likes of Miami, Madrid are going to be natural homes for a lot of that risk. London's job is to compete with those centres, but equally to work with them. There's going to be risks that come into the Madrid market from Latin America that the Madrid insurers need solutions for, and London needs to work with all of those different sort of points in order to be able to sort of keep itself relevant and keep itself in the game.
I also think that where London is still very relevant is, even if business comes into Madrid to be placed here, there are still facultative placements go back into London, there's still treaty placements go back into London, so a lot of that risk flows back into the London market eventually and probably ends up there.
Guys, can I pick up on an area that has been mentioned quite a few times already? I think Alfredo Castello mentioned it in his opening, and it's something that I seem to hear more and more about, and that's customer service, and in particular claims and insurers' willingness to pay claims. And so I don't think I could argue too much that London is innovative. There's a lot of capacity, there's a lot of specialty expertise, there's a lot of functions around the underwriting industry, lawyers, lots of adjusters, that makes London a place to approach. But what about the reputation of London around claims, Paul, in particular, and in terms of issuing documentation and being quick around certification and around the world? Where is London in that game?
I think London's in certain areas is incredibly responsive. If you look at the specialty lines, if you look at things like aviation, energy, we were involved with the sort of Air France loss in the Brazil flights. Air France got the full payment within 7 working days. Deepwater Horizon, again, that claim in terms of property was settled, $100 million of loss within 5 working days. Money in the client's bank. So the London insurance market in those specialty areas can respond fantastically well, responsive to the client's needs, and be really focused. However, in other areas, it's not been great. The move straight to litigation as opposed to discussion is being a problem, and the reputation builds upon a few bad instances, and claims is why we buy insurance. It's one of the key deliverables, and if we are going to improve the customer experience, how we approach claims, how we settle claims needs to be sort of take a step change. And I think a lot of the insurers have recognized that. We're seeing more charters come out, more commitment to proper claims settlement processes, more engagement rather than litigation. So I think the market's on the right path, but again, it's the responsibility of all of the members of the market to continue to drive that momentum.
I'd just like to pick up a point on claims, because I've been involved in a few claims where I would say that the London market has not performed particularly well. And usually what it comes down to is, and this has happened, I've seen it many times on the reinsurance side, where you have a local carrier who probably has a very deep relationship with a client. There's a loss, and the carrier just pays. doesn't get much information, doesn't go into the loss in any great degree of detail, doesn't adjust it very strenuously, and just pays, and then expects the reinsurance to pay on top. And that's, I think, where London bogs down, because if London doesn't feel it's getting the information flow through, then the lawyers come out, the process stops, the brokers pull their hair out trying to get things done. And so, I guess what I'm saying is the London market responds extremely positively to information, to contact, to relationships. And people who have built up those relationships and placed parts of their programs into the London market for many years, I think you'll note get their claims paid very quickly indeed.
Chris, the premise of your question was the willingness to pay, and it's an important part of the decision-making process. I actually think it's probably only more recently that actually that basic concept has become part of the decision-making process. And that goes, I think, for some of the broader service issues you mentioned. I think, as I said earlier, I think very often the service has been the sort of consequence of the deal. I think more and more today we're seeing service performance and service capability as now being a differentiator. I mean, there's nothing like a competitive market to encourage insurers to try and differentiate themselves. A key area, I think, of differentiation now is around service. And I think certainly all of us as brokers are spending more and more time working with the carriers, understanding their service proposition, and actually providing insight to our clients around not just the capability, but also the performance around claims. And Paul, you mentioned the commitments that carriers are given, and I think that's a great step forward. Sometimes, though, when you look at the commitments, I read one commitment where there was, once we have agreed the claim, we will pay within 7 days. I mean, any of us in this room can make a payment for a service in about 10 minutes on our phone, and we've got a major carrier committing to pay money in 7 days. That shouldn't be a KPI. So totally agree. I think there is progress, but I think we've still got a long way to go in terms of service generally. But that claim service and that claim commitment, I know, remains a frustration.
I'd just like to comment on that because one of the things I found is that there are substantial differences in process between the way the London market works and some of your domestic markets work. And for the regular buyer, such as the aviation company or BP, who buy year in, year out into the London market, they have developed relationships, they understand the process. The problem really comes from the spot buyer, somebody who's never bought in the London market and buys for the first time. So a simple example, but if you take France, which is a market that I know extremely well, in France, the claims process is that the insurer nominates an expert and the insured nominates an expert, and the experts in France only work on the quantum of the loss. The coverage is worked out by the leading underwriter. In the London market, in the UK system, and to some degree it's the same thing in the USA, actually you have a loss adjuster. The loss adjuster is only appointed by the insurer, technically speaking. Usually the client does not appoint his own expert unless there is some dispute. And the loss adjuster not only issues quantification estimates, but also issues an opinion as to whether the loss is covered under the policy. So you can see that if you come to the London market for the first time and you are very used to your own processes, you are now coming up against a different one. And I think that's where the brokers have a big role. I mean, we spend, and I've spent in all of the companies, the global companies that I work, huge amounts of time with my colleagues moving beyond the transaction. The fact that I've managed to find occasionally 10% capacity in the London market has not been the problem. The problem is, how am I going to make that 10% capacity work in terms of follow form on the wording, in terms of claims process, in terms of premium and claims flows? France, for example, the money goes from the insured 100% to the leading insurer who distributes it, and the bureau that distributes the money to the co-insurers sits behind the leader. In Lloyd's, the bureau sits between the broker and the leader. So there are very, very big differences in terms of how it works. And I think to get the best out of the London market, you definitely need a broker that blends that capacity into local market practices. And facultative reinsurance is actually a big answer in Europe, even though there's freedom of services, because a lot of customers in Sweden, Germany, Italy find it easier to use the London market capacity, but transparently by getting their local leader to buy it, than actually going to place a co-insurance share in the London market.
Thank you for that response. I mean, I think I got there a role for the broker in the London market, which is good. But I come back to my issue of complexity and service. It shouldn't be something that we spend so much time talking about, but it is an issue I know for our customer base out there. And I want to sort of come back to the other issue that I think constantly frustrates the client base, and that's the fact that we talk about innovation. Uninsured losses still represent the majority of the quantum of a loss, and what I see is the market and London as well fighting away in what I would call the red ocean, where we're talking about property or D&O, and yet there's a huge area of blue ocean where there are less competitors or no competitors, and this is a frustration for customers. How you talked a bit about innovation, James, at the beginning. How can we bring together the sort of the innovation experience, the qualities of underwriters we've got in London to try and take that quantum leap into resolving some of these other issues and to make our industry more relevant as we go into the next period?
Well, I think that in this blue ocean, as I said in my opening words, probably around 2/3 of the risks that are on the company's risk register are uninsurable. I genuinely think that there is a lot of effort being made to try and innovate. So some of the areas, for example, is, there is in the London market a number of syndicates who have dedicated some capacity to supply chain insurance. That's non-damage supply chain insurance. There is a thriving cyber market at the moment. There is in the same market non-damage business interruption. There is a lot of innovation going on around people risks at the moment. So typically in the past you would have a kidnap and ransom policy, and then you'd have a medical repatriation policy. And increasingly, the London market is trying to bring these people risks together, including the services. So when one of your employees is in trouble, do you care whether they're in trouble because of political reasons or because they've been poisoned or because they're ill? You just need to bring them back home. So why not have one insurance policy that covers all of that? Why not have one service provider that repatriates your employees? Terrorism is another one. It's become increasingly difficult to understand or to prove what the motive is. Is it an insurrection? Is it terrorism? Is it politically motivated or not? So now the London market is offering full political violence, where you as a customer don't have to prove whether it was a strike or a riot or a civil commotion. Basically, as long as there's been some violence, it's covered. The biggest barrier to all of this is that when these new products emerge, most underwriters, and Jason can comment on that, can't go into the reinsurance market and buy a treaty for it. So they're working really with their net capacities. So in the early days, they don't have much data to produce the analytics. So pricing the product is difficult, and they don't have much capacity to offer. And so a lot of customers go, all that trouble for just 5 million of capacity. I've got 100 million risk. I think, the 5 million you're offering falls within my risk appetite and risk tolerance, and therefore I think I'll just carry on uninsuring it. So the real challenge is to find the customers who are willing to push the boundaries and experiment, and I think that's what will accelerate innovation.
Capella Holdings?
Well,
what are they doing about this?
It's funny because cyber is the great new hope for the market, new source of premium and what have you. We don't write it, and we don't write it for the simple reason that we don't understand it. And I think, when you look at risks like cyber, where the interconnectivity of the risks amongst the whole portfolio you write is such that it's almost impossible to put any analytics around it to try and understand what your portfolio PML would be. And, I don't suggest we shouldn't be looking for a solution, but we're in a very soft market, and I believe that people are kind of wading into this new class because they need to try and write some new premium. So I'm on the very nervous end of that. And you're right, we can't buy any reinsurance for it, and frankly, it's not because my major concern is all the recent cyber losses. They've hit the complete limits of the policy, just blown them, and we don't actually understand the true extent of the loss. So you go and buy a $100 million cyber policy, blow it, the loss could have been 2 billion, 3 billion, 5 billion. So we have no real way of gauging that. So I'm a little bit nervous about cyber. For the moment, I don't think people who are much cleverer than us can work it out, and then we'll follow them along later.
There are couple of points for me around innovation, and predominantly through the eyes from my time at the carriers, and that's around sort of collaboration and also value. Because there are innovative products. There are a number of examples where the take-up of those products has actually been very low. And part of the challenge certainly we had as a carrier was around the traditional sort of quantifying the risk, the likelihood and the severity, and actually finding clients prepared to invest the time with us to actually develop a solution that works and help us as markets actually understand the quantification of the risk. Second challenge that we found, and I think this is sharing the love between us all, is how do you value innovative products? Very often we can put a price on a potential product, and we were finding the client or the broker, if I turn it back on myself, was valuing that against traditional property and casualty pricing rates. And therefore, there's a demand for innovation, but how we view the value of that innovation, I think, needs to change considerably. And as long as we keep comparing our new products with our old pricing models, I think we're stifling that innovation. So I think there's no silver bullet. It's not a broker issue, it's not an underwriter issue, it's not a client issue. It is actually all of us together, Chris, I think, is the answer to your question from my perspective. We've got to collaborate to get more innovation.
Just to come back to the comments that I made in our earlier statement, when you look back at the early buyers of those mobile phones that I mentioned, were they courageous people that basically kick-started an industry that now enables us to have these amazing smartphones, or they were complete fools buying an inferior product at an outrageous price? I mean, you can look at it both ways, but it takes courage in innovation. On both sides, it takes courage for the underwriter to go into an area where he might not have all the analytics that he needs, and it takes courage for the customer to go and buy a product that doesn't appear to answer 100% of the needs. So I think it requires collaboration.
Okay, guys. We're coming towards the end of the debate. I've got, from a selfish point of view, I've got a question that I'd quite like some help with, really. But Mapfre Global Risks is very proud of its achievements in Spain and in South America, and it's built its positioning largely around its relationship and its ability to deliver service and find solutions. And the bar for services we've been talking about is getting higher and higher. Now, from my perspective, as I look to try and develop a proposition for Mapfre Global Risks outside of these home markets, we set ourselves out to be the most trusted global insurer. Where do you think I should be pointing myself as I try and take the success story of Spain and LATAM and take it into the international world? Is London the right place to start? Should we be looking more at service? Should I be looking at a broader selection of products? Any help, guys, from the way we go?
I would suggest start with what you have. I mean, the culture. We talked about, in my experience, the relationship depth being a lot deeper with the clients here in Spain. Build on that. Focus certainly on service. Recognize, however, if you're going to develop in the global risk space, you need the product as well. Not just the underwriting capacity, the claims, the risk control. I guess what I would counsel on not doing is falling into the pack as a capacity provider. I don't think that's necessarily the right way forward. I think build on the heritage, build on the unique brand that you have, and try and continue to differentiate from the pack would be my view.
I'd agree. I think you mentioned one very important word for me, which is trust. Trust takes time to build, but it's such a valuable commodity. If your business partners, be it direct clients, brokers, have that trust, and you've got that in an overwhelming levels in the markets you're operating in, you need to take that forward. And build upon that, because that will create the right momentum for you to secure your positions on whatever sort of business you want to compete on.
Okay. Well, from my perspective, I think it's also to echo what Paul has said is a matter of growing consistently and confidently. I think that I'm amazed always at how long the memories are in our business. I meet customers who said Yes, well, I remember your company, and 25 years ago when they tendered on the business, they didn't do a very good job. Or we used to be with that insurer, and 15 years ago they didn't pay this claim. So the worst thing you can do as you develop is to charge in and then pull out. The best thing really is to grow confidently. That doesn't mean to say slowly, but I think you need to be, you mustn't charge into a market, upset everybody, and then pull out with huge losses 2 years later, because that damages the brand. And I think for me, the Mapfre brand is incredibly strong around the quality of the relationship that it has with its clients, the technical backup with eTSIMAP, the network in Latin America. You've got, I know of one US client who actually uses Mapfre for the service, for the fronting and things like that, which is quite extraordinary if you think about the fact that that's how highly a US client values your capability in Latin America. There are plenty of clients in Asia and in Europe who have lots of assets in LATAM, for which you are very well positioned. So I think I'd echo what my colleagues have said, is build on what you've got, but do it consistently, and you will build your brand, and it'll be strong and trusted.
You asked about the relevance of London in these plans. I think clearly Mapfre now has joined the ranks of the big multinationals, which I think probably wasn't the case 5 or 10 years ago. Now you are. And as you build out that business, you need to have something in London. You need to have a presence in London. London is a significant marketplace, and so you need to be there. But it's not the only place you need to be. You need to be in other markets as well. And I think that's one of the strengths that Mapfre has, as it builds out it makes acquisitions and builds out its businesses overseas, is that you have strong local presences as well. If you have strong local presence and you participate in the major hub markets like London, then I think that's got to be the way forward.
Guys, we haven't quite finished yet, because I'd like to, in the last 5-10 minutes or so, see if we've got any questions coming from the audience in terms of what we've been hearing. And just let me summarize so it gives you time to get the questions ready. But I think what we're saying here is that it is an important market. It's not the only market. Markets in Hong Kong and Singapore are growing. New York, Zurich, and indeed Madrid. Madrid's an important hub. I think what we've heard is that there's some very strong parts of the London market around innovation, capacity, moving quickly. But there's also some challenges around delivering service. And I think, personally, having over the last 2 years since I've been in Mapfre, I pick up quite a lot of comments about Lloyd's and London that really were for 10, 20 years ago. And I wonder how well we market the way that the London market has changed, and the regulation and control that's there. And I think it's great that guys of this stature can come out and give some indication about how the market is going. So, any challenges out there? We've tried to get a balance, good and bad. I see a hand up there, Ulrich. I forgot to mention that Germany is also an important global market. I'm sure that's where the question's going to come from.
Thank you very much indeed. That's the only reason why I rise. I'm Ulrich Stürmer, the Mapfre Global Risk German branch office. My question came up this morning when I took the shower, listening to the news from the island. Goes now, if we talk about the London market, what is your future view on when, if Great Britain or England leaves the European community, what impact will that have on the London market?
Jason, I think this is one for you.
Yeah, I mean, that's an excellent question, and I think it's a question that it's being asked not just in our sector, but by many sectors. I think it looks like the results of the election today will be another Tory government, but this time on its own, not in a coalition. I think that's going to put some stability back in the marketplace. But with that comes the promise of an in-out referendum, whether we stay in Europe or we come out of Europe. I'm a European, at heart. I went to the European Business School. I believe that we are much stronger as part of a European bloc than we are apart. I think that there are a lot of multinational companies that will think twice about headquartering in London or in the UK. or putting operations in the UK in the future if it's not part of the European community, and we rely upon the European community for a huge amount of our trade. So I think that will have a negative effect on the London market and balance. However, if the London market continues still to provide products and services that international clients want, it'll still be there. But I think I just get a feeling that if we leave Europe, that will be to our detriment. I don't see much upside from leaving Europe, and I see a lot of downside.
I think, for me, an interesting parallel is Scotland, where, actually the debate that was going on about the independence of Scotland was more damaging. What creates problems is uncertainty. So actually the referendum in Scotland has brought that issue to a close. The Scottish people have expressed the wish to stay within the United Kingdom. We have more certainty now. One way of looking at the referendum that the Conservatives have proposed for Europe is that the Conservative Party in the UK, which by the looks of things is going to have a majority, has been torn inside for many, many years since Margaret Thatcher about the pro and the anti-Europeans. I think that this is my own interpretation, but the referendum will shut everybody up, because I'm confident that the UK will say we want to stay in, and at which point the Prime Minister will be able to say to the people in his own party, the people had their choice, they've expressed their choice, so the anti-Europeans, please, that's the end of the story, and that will create more stability rather than less. I don't have personally any worries about the UK in a referendum voting to come out of Europe. I think there is a minority of anti-European people, in the same way that I don't think, I was worried about Scotland putting out. But you've got parallels in Spain. What happens if you give, the Catalonians or the Basque Country the referendum? It's a scary thought. But funnily enough, once that referendum has taken place, it actually makes things more certain rather than less.
Good question, thank you, Ulrich. We have time probably for one more question from the audience. My eyesight's not very good. If anybody's got their hand up and I can't see them. Any more questions? Yes. Sorry, I can't quite see who it is, but there's a hand up in the air there.
Hello, I'm Jairo Chiavari from Ribesalat, and it's a question for the London panel, and it's regarding Mapfre's presence in London. Do you envisage Mapfre Global and Mapfre Group, anyway, becoming a big player in other territories than the current Spanish and Latin American, as a London market player?
Well, I'll give my answer, and if anybody else has got any comments, I'd be interested to say. But I constantly get the challenge of, are we going to be a big player in London or in Paris or in Germany or in Asia Pacific? There's no doubt the opportunity is a huge one, but it makes sense, and somebody mentioned it on the panel, very good advice. That this is a very, very dangerous business, and the most dangerous thing is to over-expand and then have to pull back out. Your reputation in this market can be damaged by one withdrawal, and it can affect you for many, many, many years. And I have some experience of that with my previous company. So we're going to tread carefully, and we may miss opportunities in the short term or even the medium term, but it's about the long term. And I can't really stand here now and say whether we're going to be big in London or in Paris. It will evolve, and it's, for me, the most important thing about the 2 years that I've been in Mapfre is that it will evolve with the principles that have made Mapfre so strong in Spain, and that's taking our time, working with trust, and doing things properly. And so it's very difficult to stand here and say, despite the fact that the finance guys want to know what our plans are for 2020, 2025, it's very, very difficult. The market is constantly changing, and who knows? But we will definitely do things properly, whether that's dominate markets or not. I can't really say at this stage. I don't know whether anybody's got any views to add on that.
Defining big is always the challenge, I guess, and it's around expectation. I think it's important to focus on being relevant in the selected market. And I think size follows relevance. You know, if you start with a pure ambition plan around growth and top-line growth, I think you'll start to lose relevance. So for me, I think the answer is there is an opportunity to be far more relevant in the global risk sector. And if that's a focus, then I think you're well on your way to getting there.
Okay. Well, gentlemen, thank you. Oh, sorry, we've got...
I'll just echo that. You know, Mapfre has its seat at the top table. What it chooses to do now in the future, if it builds upon the culture and the success it's had, then, you know, you can take the business where it wants to.
I would just add, Chris, that if you look at major brokers these days, they're looking to slim down the panel of companies with whom they trade. Because, you know, I know, look at Willis, they've got thousands of different carriers with whom they trade. And I think they're looking to bring that list down significantly because they don't need to trade with so many and they want to have more meaningful relationships. I think Mapfre is perfectly positioned to play in that because you are a big trading partner of all of the brokers represented here. And you have an opportunity to go in and take market share and be one of the players if you wish to do that. But in traditional Mapfre style, it will be done very thoughtfully, very carefully, and make sure that, you know, there are no nasty surprises down the line.
Thank you for the questions, and especially thank you to the panel for coming out here and being part of this debate. So thank you.